Hi everybody. Today on Meg's Minute, really quickly, I wanted to touch on the interest rates and what that means for buying and selling houses. There's so many things that can go on with all of that. Interest rates yesterday just shot up above 5. If you have good credit, you're getting quoted at a 5. And a lot of people don't understand what that means. It basically means when you're taking out a large lump sum, there is going to be that percentage until you pay off that lump sum, that percentage on top of the amount of money that you are withholding. So basically, you're taking out a loan for your home, and then there's an interest rate until that's all paid off. So kind of like on a credit card, if you don't pay off your credit card, you're going to get charged an interest rate. It's the same exact thing, only you're talking about a lot of money for a home. So in Chicago, just like all the other big cities, we're really getting hit in the face with it really slowing down. Inventory's low, with the interest rates up. Everybody's kind of waiting to see how everything turns out. There's a lot of fear out there with purchasing a home right now. With everyone's talking about a bubble. People have been talking about a bubble for a very long time, and basically what's happening is there's a shift in the market. Everybody's home kind of like shot up after 2008, after the market bottomed out, and basically it shot up and now we're kind of plateauing. So it's going to be like this for a while until we hit another economic reason of why we're going to need it. So basically with the rates being so low for so long, it really feels like people are starting to freak out. Oh no, they're so high. And in all honesty, they really should be at a little bit higher of a rate, at around between 5 and 6%. Now keep in mind, back in the 80s and even in the early 90s, people were buying homes still with a double-digit teens amount of interest rate. I think my parents had an 18% interest rate on their first home loan. So when we look at it in a big picture, it really just means the interest rate is going to directly affect how much you can purchase your home for. So with all of that being said, it's hard to look at it on a grand scale and a lot of people are like, how's the market? How's the market? How's the market? And what happens when you ask that question, every area is different. So the market here in Arlington Heights is going to be drastically different than my hometown in South Bend. So the market in Arlington Heights is also going to be different than the market in Chicago. They're way more correlated for sure, but it's very much directly related to the politics in that area. It's directly related to the school districts in that area. And, home prices are affected by the taxes in that area. So honestly, interest rates, they have a very big portion of what your payment is per month. But it's also, people aren't really wanting to move. It is the end of the third quarter. We're going into the fourth quarter, and it really a lot changes. So every person's situation is a little bit different when it comes to buying a house, and I would love to discuss it with you. And if you have any questions, let me know. So Meg's Minute is today about what it really means with this whole interest rate and how that culture and how that shapes the real estate culture. So thanks so much for listening, and I can't wait to talk to you guys soon.